especially post-COVID. We have seen growing interest in equities market, and now we hear, the most unlikely people like housewives getting into investing in equities directly. So those developments are taking place. But on the other hand, India as a country still has a large number of people who are not accessing financial services. So, and probably financial literacy has never been as important, because recently it has become a very important policy imperative also. So it has a number of aspects. I mean, it is a policy imperative. At the same time, because you all belong to the corporate sector, I would also like to know whether it has a business case also. We have had campaigns like Mutual Fund Sahi Hai, which was an education campaign, and it has led to tremendous, externalities for the mutual fund industry. So I think the floor is open. Any one of you can open and talk about it. What's your take?
Sure. As an opening batsman in the same subject, see what India has witnessed in post demonetization, which is an boom in disguise, because the objective was something else, but what we achieved is that in digital economy. So the number of UPI transactions went up substantially. Along with that, we also saw the combination of Jan Dhan, which made the financial inclusion a little bit broad-based. That brought it to the system. Then the third change which happened is the accessibility of the internet. Now today the accessibility of the internet is the cheapest across the world. The number of UPI transactions now we are far higher than that of China. Number three is that the penetration is significantly broad-based now in the economy. Now if you look at India, today per capita GDP is around $2,000. Now 2,000 to 2,200 broad-based you can look at it. But if you take out only top 50 families, the per capita income comes down to $800. So it is significantly lower for that reason. But still, we have a large base. So the labor utilization, what you want to do by 2030, we will have the most productive country in terms of the producing or supplying labors to the rest of the world, number one. Now, all this financial inclusion led to something else, which is the equity rising. Now, how the things do stack up? We keep on hearing equity market is good, bad, ugly, it is overpriced. But let me put some numbers to the perspective. So, Indian market today is around $4.5 trillion. Out of $4.5 trillion, only 15 to 20% are actually tradable stocks. So, the horizon of your investment is only $600 billion to $800 billion. Against that, we have got mutual funds sitting with a surplus cash of $30 billion. Your gross SIPs are hitting at around 20,000 crore. Net is 12,000 crore. So another 15 billion coming from these investments. EPF is another 10 to 15. Then we have got additional PMS money, another 10 to 15. So against 600 to 800 billion, we have got sticky flows of anywhere between 60 to $100 billion. So your question that whether markets will correct, maybe Indian market has a premium which is going to get further premiumized. Now, how these numbers stack up against the growth stories of other economies? If you look at Japan before the correction in 1989, their market cap of their equity market of the total global market was around 23%. That's the kind of number what they hit. So for that reason, on the Indian market, people have witnessed significant amount of growth. So we are seeing significant amount of allocation towards the equity market money which is coming in. But at the same time, if you look at the numbers perspective of what is happening, a lot of people are enticed into investing in the FNO side of it, which is not an investment, which is a hedging tool. And as per our analysis with the publicly quoted numbers by Zerodha or Grow or other security houses, almost 95% people are making losses. So they have
SEBI came up with a report.
Yes. So SEBI came out with a report. The rally has happened mostly on the small cap and mid cap side. Now SEBI also came out with a report how much time you want to take to liquidate these positions. Mutual funds came out with PMS houses we want to take, let's say 20 days, 25 days, all those numbers. But nobody understands, okay, 25 days you can sell it, but what is a haircut you have to take? Your investment is 100. Whether the market has that liquidity or not, whether you can liquidate it or not. So it's a kind of evenly balanced right now. One side, yes, market has got strong demand coming in, broad-based recovery. We are still, our nominal GDP is growing at around 11-12%. So every 4 or 5 years, we'll see, doubling our GDP. That's impact is going to come. So one way is your 11-12% GDP growth, nominal. Second is that your rupee is not going to depreciate that much. Or today, your current account deficit is almost hitting the surplus zone. So capital allocation is going to come into India. For that reason, there are a lot of benefits one side. Other side, of course, there is a risk, inherent risk, which is being factored into it. Now, if I extrapolate this to the large audience, so how this is going to help the economy at a large. The Indian economy, rather than the financial inclusion, more important is the education part of it. So if you need
Precisely, that is what we want.
Yes. So upliftment of the society. Upliftment of the society means you need to educate them to a certain level. Education doesn't mean just having the degree. Genuinely imparting the knowledge of the financial markets, which is going to help them. It's going to come out with a risk-taking ability. What risk to reward, you need to define it. You are like, you are a risk our individual. It's not a risk ours individual. You should basically know what are the risks I'm getting into it. Unfortunately, there are a set of people who are getting into the risk without knowing to the market, without knowing what are the risks they are associated with. See, a lot of financial inclusion which has happened, I'm giving an other contrary picture to it. The people who have invested, and if you ask them what is their risk-taking ability, probably you as a country score very low in terms of risk-taking ability. Like the example of the Jews, if I have to give it, there are studies around it. They are the ones who are the most risk-taking people across the world, and most of the companies, listed companies, which has come from the Jew side of it, we have not seen that kind of story in the India. Now, within combination of education, combination of the financial market, I think it's going to give you a lot of robustness for your value creation.
Okay.
And across this cycle, you are also seeing your growth story of the real estate is also playing really well. When real estate typically does well, you see economy also does extremely well. And last point is that we have got a stable government. Now, there are hypotheses whether stable government helps the economy or not. Classic example is Argentina. Argentina as an economy fundamentally looks very strong. Venezuela looks very strong, but they have suffered because of not a very stable government out of it. So all the factors, if you put it, it is strongly poised for it. Economic value creation, what is going to come over a period of time. But at the same time, the problem is that how to uplift a larger portion of the population to a next level. That's where the challenge is kind of.
Exactly. And a lot of steps have been taken. So, I mean, other perspectives about it, how financial literacy can lead to, or it can be improved in India currently.
I think, I'll just, so one of the things that we do, like you were talking about, is education, right? And we all agree that it starts from home. So I think the conversation, as we are seeing the new India, as we are seeing the influx of and the interest of people getting into the financial markets, trying to, get a share of the pie, right? The discussion needs to start at home with respect to how do you talk about money, right? Because most of the middle class families, I think it's still a taboo to talk about money. Just the other day, me and my friend, we were just talking about the equity markets, how we used to see money, etc. And she told me a very, very interesting point. She said that, look, my mother actually got me something from home, and I just sent her the money. It cost her some $1,000. I just UPI'd her $1,000, and she got offended. She couldn't fathom the fact that I sent her money. Her counter argument was that, hey, why didn't you give me something, something tangible, right? Like a gift or something. Why do you have to give me money? So I think there's a lot of dissonance between associating with money and wealth creation. I think that needs to dissipate to a very, very low level for somebody to be able to talk about wealth and then create wealth as a consequence of it. And I think it starts from home. I think we need to start discussing about money, because I think right now, like you rightly said, there's so much of wealth creation opportunities on the table as we see. So if you don't think about money the right way, if you don't behave about wealth the right way, you're just going to end up burning a lot of it and burning a hole in your pocket rather, and then probably withdrawing from the entire scenario, saying that, hey, this is not for me. So that's probably.
I think that's a very important
starting
connect
point.
that you have created about home, because the World Bank has been funding projects in India where women financial literacy and financial education is being
Yeah.
targeted. I think
Yes.
Ratnakar Bank Limited got a huge project
Yeah,
from
yeah, yeah,
them. You probably want to talk about something like
No,
that.
I've read about it. And,
Yeah, exactly.
Actually, after listening to him and you, I have one point. Basically, considering the urban population, there are broadly you can say 2 or 3 types of people for in terms of financial, management. People who are investors who are entering into these markets and stuff. I am looking at more of a entry level engineers and employees and these youngsters. I see a big problem over there. Consumerism has increased to such an extent post COVID. They hardly save anything for themselves.
Yeah.
They hardly save anything for themselves, and I'm seeing guys like with very entry level salaries buying cars, and so it's fine to a certain extent. But when talking about financial, literacy and kind of a stuff, they feel that okay, there is no risk, but I see a lot of risks. It takes just a small dip for 1 year for them to go everything haywire because they're under so much of debt. And to that effect, we are actually organizing some sessions, financial literacy sessions for employees.
Excellent.
And it almost all the employees, except for the company provided medical insurance, they do not have a personal medical insurance. And God forbid, let's say, out of job for a few months and you're totally on your own. And this is not just the youngsters, even people who are into the 40s, they don't have. So it's just that, okay. So I feel this kind of literacy is very important because not being pessimistic, but at the same time, these are basics to be covered.
So I'll just add on, I think, first of all, thank you for the master class because it's an area which I mean, talked about financial literacy for women. I think there was something done for me as well. Because I somehow, till I got married was completely in the sea. Fortunately married somebody who grew up in Gujarat, Bengali, but she is financially very smart. Now, I think from a context perspective, things have changed considerably. So he talked about the market, he talked about what the government is doing, he talked about what banks and financial institutions are doing, right? UPI transactions. I mean, there are people, relatives who come from the US and they can't figure out what the hell is happening because they don't have that, right? We are talking about now extending credit through UPI, right? I mean, just recently the company called Zeta Finance launched a stack which will enable that, which HDFC will start using, right? And they are working with the government to really run some of that. So contextually, there's enough and more which can help people become more financially independent and build value, right? But I think the root of the problem is in the understanding of the fact that they need to do it, right? So, you talked about doing multiple programs for your employees and team members, which is around financial wellness. One thing that we do is that we extend it to the families as well, right? So, as an employee, please do include your parents or whoever you want to, so that they also get educated in the process, because some of the decisions, to her point, comes from the family, right? So that individual might be very interested in investing, but the father has been taking all the financial decisions even after 15 years of the person working, right? So you have to hit the problem where the root is. So I think that has helped us in some senses, but again, that master class was very